Since the time you've been at Live Oak and now Lumos, how has the SBA lending market changed, and even conventional lending?
It's changed a lot. It's weird. It's changed a lot, but sometimes it feels like it changes slowly. I think for, many years, SBA lending there was a verbal push for banks to do smaller dollar transactions. And I think that fits very well in the franchise world, kind of those six-figure loan amounts versus, the seven-figure loan amounts. So it was a push to do more smaller dollar lending. And I think one of the biggest changes recently with SBA is they're putting rules around small dollar. I shouldn't say rules around. They're putting in rules that better make small dollar lending more possible for SBA lenders. And that's
where they can profit from it. Because talking to a lot of banks, like it just wasn't they didn't do it because they couldn't figure out a way to make money from it.
It was very inefficient. You're exactly right. So creating those efficiencies and SBA making some changes to the program that allows for that is certainly a positive change, especially as it relates to franchise lending, franchise funding. I think that's a big recent one. Probably to answer the conventional question part, I really think both of those probably work together in the sense that over the years, especially in the late teens, really strong economy, making a good credit decision was a lot easier, at that time. And so you have kind of this ebb and flow of like, when does an SBA loan make sense? When does a conventional loan make sense? I think banks were a lot more willing to go the conventional route versus SBA because economy was so good. So you had the kind of this ebb and flow of what belonged in SBA, what belonged in conventional. Also, the rate situation, rates were low, deposits, banks were not paying a lot for deposits. So they were offering, these great low
margin
rates, yes, to these, small business loans. There was a lot of competition for rates. And, now we're kind of seeing all that sort of up in, we're not in a place of cheap funding sources for banks anymore. So that on both SBA and conventional side changes the dynamics a lot. So it's, and what I think sometimes can be viewed as sort of a sleepy industry, there's dynamics constantly going on kind of that you don't see. So there's a lot of change for something that can sometimes feel slow.
And I can imagine for franchisees that were funding like 5 years back, like getting a 5%, 6% rate wasn't out of questions, where now, know better than me, is it like 10, 11%?
You're going to be up there. Yeah, for sure.
Yeah. So that makes it that much more important on whether it's a new franchise you're opening from zero ground up, or if it's a franchise acquisition, that there's a nice buffer for that debt servicing.
Yeah, 100%. Yeah.